Let's get into some numbers. I know we have a bunch of charts and different metrics we want to get into. Amir, you can share your charts. Matt, I'm going to start with you. I see you shared some charts right here. I'll give you the floor, and you can kind of take us to any direction, and then we'll keep going from there.
For sure. Yeah, I just wanted to kind of give people some context with respect to what they are guiding for, because I think a lot of people are coming up with numbers in their head. And so what I had done is just taking the opportunity to create some charts, trying to be more like Amir every single day, right? So what I basically had done, and you can kind of see the hollow or transparent or translucent sort of valuations in here, where they're kind of guiding for in terms of net income. And some of this is my personal kind of adjustments, but hopefully we can get an idea. So the 772, that's the 27% revenue growth that you're kind of hearing from Palantir in terms of guidance. So you can see that is a tick down from where we were last quarter. In the third quarter, we printed a 30%, and that obviously was met with a lot of optimism. The stock going from the 60s all the way to the 80s at this point. So the stock rallied very heavily on that. And so with that, we would end up at about a $2,810,000,000 trailing 12 month or fiscal year 2024. And with that, you end up, I guess, slightly in the 26-27% year over year sort of growth rate. Keeping in mind you were at 21% in the first quarter, 27 in the second, 30 in the third, and then if you get to 27% in the fourth, you end up in the kind of mid to slightly high 20th percentile. And with that, you can end up with about 4.8 billion in cash. I don't necessarily have too much. This is kind of an estimate, 674 in terms of customer count. I kept share-based compensation. I didn't necessarily know what to think based off the SARs, etc. But just wanted to share this in case we need to reference it at all through the conversation today, where we're at. And I think one thing that was very interesting that I wanted to kind of keep track of is with respect to buybacks. I kind of started a buybacks over share-based compensation in terms of dollar amount purchased. It's actually very interesting. So we purchased about $1.8 billion worth of shares, but at the same time, if you actually look at the amount of repurchases compared to the actual share count, we've over the past, say, 12 months, we've given out about 130 million shares total. And even though we've spent, close to $45 or $50 million, we've only repurchased about 1.8. So it just goes to show the shares that these people are getting are very cheap shares, obviously due to the fact that the price has expanded rather rapidly. But I'm also very curious to see where net income shows up. Gross margins, I anticipate everything's going to be okay there. But yeah, I just wanted to kind of get into the room and share, because I think a lot of people are saying, hey, we should be expecting 35, 40%, but that's not what Palantir guided for. So I just want to get people back grounded in reality, and it very much well could show up as 35, 40%, but that is not what Palantir guided for.
Yep, that is a fair point. Amir, you can load up your charts right now in the back as well. And I think I'll let you figure out what we get started with, but I think either revenue growth or customer count might be the first one that I believe you want to get started with.
Yeah, sure. So similarly to Matt, it's nice to get everything visualized because it puts things into perspective. So should we talk like point by point as we go and discuss around it, or should we? Do you want me to just present stuff, or?
No, I think let's pick one metric, and then we'll pick one metric and go around the horn. So this is what we'll start revenue growth, and we'll get everyone's take on it. So.
Yeah, I hope this shows up well on stream. I know StreamYard like compresses quality, so it's kind of bad, but here's zoomed in. So my estimates are around that 800 mark, which would be a slight increase year over year. But keep in mind that Q4 of 2023 is a much stronger comp year compared to the 3 previous quarters. So hitting that 31% will be a lot more difficult compared to in Q3. But I think just for the stock quote, anything like that is a slowdown compared to the previous quarter, it would really be bad for the stock if I had to guess. So I estimate something like around that 800 million mark, because we just need to see some sort of increase if we're going to have some hope of staying around that $80 mark and keep the momentum going, at least narrative wise. So I'm curious to hear what you guys have to say about your expected revenue growth.
Can I ask a clarification question, Amir? Are you hoping that it gets to 800 because you want the stock to stay positive, or you want it to be 800 because that's what you think?
No, it's my actual estimate.
Okay, yeah, I'll chime in here. So I did some quick look at 800 million. You're at about 10% quarter over quarter growth, and we haven't seen that since 2021. The last time we had seen anything close to a 10% quarter over quarter was 9%, and I believe that might have been, let me double check my numbers here. I think it was 3Q of 23, fourth quarter of 2023, and everything else has been a print of about 4, 7, 6% in 4Q of 2022. But yeah, the last time we had a 10% quarter over quarter was the fourth quarter of 2021. So I believe that would be I'm not saying you're wrong, and I hope for the best and for the underlying company to meet that sort of expectation, but we'll find it very surprising if that shows up.
Let me chime in here, Matt. Do you think, given Karp is touting all this stuff about demand, especially today on CNBC, he said we have just so much demand, we can't handle it. Do you think if they don't show 10% growth quarter over quarter, then all this demand stuff is not real that he's talking about?
I don't think it's not real. I mean, they are growing quickly to an extent. I mean, if you think about it, he's been saying kind of the same sort of discussion since 2023, 2024, since they released AIP. And, we've seen 7% quarter over quarter prints for the past 3 quarters in a row. And I anticipate we'll see a 7 to 8% print come here on Monday. But 10%, that's huge, right? I mean, that's 75 million increase in a single quarter. And if you take into account what we saw in the previous quarter, that was 17%. That's 18% growth within 2 quarters. That's pretty expansive.
I think the reasoning here is there's a lot of pull forward from the bootcamp, because if we look, let me just change chart really quickly. One of the most disappointing things that we've had is, just as Amit mentioned, the net addition of customers. And if we look at the quarter over quarter growth, it's really been decelerating, even though we got that initial. So this is quarter over quarter, this yellow bar. No, actually, it's year over year. Let me see if I can get the US commercial one done. Yeah, here we go, the quarter over quarter. So the thing that we were discussing is that, well, they have all these boot camps, but even though we got that initial push up as of Q4 last year, which is like when just bootcamp started ramping, I think they did around 300 in Q4, then 600 Q1, 1200 in Q2. So it's really been exponentially increasing, but that's not really translated into, I know it says dollar here, ignore that. It's not really translated into that customer growth that we were expecting. We've actually been seeing this deceleration. So I really expect that we will have a pull forward on that, or like a, what's called like a catch up, because many of the customers, like it takes time. Even though you attend a bootcamp, it's not like you sign up then and there. There could be a pilot, you have to convince the C-suite and stuff like that. So a lot of it, so even though, as you mentioned, on a quarter over quarter basis, it might sound like very optimistic, but keep in mind, like, I have a very optimistic view of Palantir's future. And I believe that this quarter in particular, at least the year that we're heading into, will be very pivotal, because if we listen to the UBS report, there's a lot of scale. So let me just change a chart quickly just to make the point why I believe 31 is reasonable. So if we go to the cohort growth, which shows us net dollar retention, which is growth from existing customers, we've seen that that's really been exponentially growing as a result of AIP scaling. So many of the prior quarters, AIP spending was really limited, as Karp said, like, yeah, we don't have a pricing strategy for AIP. However, the UBS report showed us that they do indeed have one. And as these customers start to scale up, we'll get a lot of growth from the current customer base. That's why customers are really important, right? We always talk about, as long as we can get through the door, we can show that Palantir is valuable to the business. And the customers, like, one, it will be sticky, but also we have this opportunity to scale up current customers, which is what I believe will continue to happen. So we had this low of 107% net dollar retention. Then we just keep going up. So for Q4, I have it going from 18 to 20. So a lot of that growth, I mean, from new customers, I have it actually decreasing from 12 to 11% year over year. Most of that growth in my 31% is actually from current existing customers. And when you have a larger existing customer base, it's easier to scale the revenue within them. And that's what we've been seeing proof of. So this 31% is actually not that extreme if you consider that most of it is going to come from, like 2/3 basically are coming from existing customers. So that's my reasoning around the 31%.
I want to hear Arnie's thought, but I did want to ask a question because you probably have this and I don't. Do you have the graphic of international revenue growth?
Yes, and it's not pretty.
And I want to know if that's the reason why we're seeing such a drag on new customer / existing customer.
So
and then I want to hear Arnie's.
Non-US commercial, and it's not a pretty sight. I mean, we have 3 quarters in a row, quarter over quarter, where we have actually been negative. So negative 3% in Q1, 0% growth in Q2, and negative 7% in Q3. So this is a huge drag on revenues.
And just potentially lost Ferrari too, right? So interesting. I need to add this. This is really good. Thank you.
Yeah, go ahead, Arnie. Yeah, go ahead.
Yeah, I was gonna say, Arnie, your thoughts on if Amir's number of 30% growth, 799 million, do you think that's possible?
I think it's absolutely possible, and I'm mute. Okay, I think it is absolutely possible, but I would underscore also that is a little bit of needed for the narrative to keep rolling in favor of the company. This 30% is really psychological because it's already what defines a fast grower company into, oh shit, this is a high growth company. So the focus will be on that. Now, as Amir mentioned that the guidance is 27%, and if you notice, typically the discrepancy between the guidance and the actual results is always like a 2-3%. And in the last quarters, we were talking about like 5% surprise, which is something that made the stock pop. Now, it is true that, so there are many dynamics in play. So we could say, okay, what's bad, what's good? Let's start from what's bad that could go against these numbers. We know US commercial is the driving force that is growing so fast, and in these quarters, it seems also the US government side is really pushing. So there is a very positive push that both attracts new customers and make the existing customers expand. We were wrong into thinking that Palantir would have started being very focused into expanding the user base, but in reality, they were more focused into expanding the depth of the existing customers. And maybe that is something that they keep doing so that they acquire new customers without the real needing to convince them, because they're already convinced. They just want to get the same product that their competitors are using. And, oh, we also want that. So that is very positive. But, and we know that the AI narrative is as strong as ever been. Palantir now has very strong reputation, so everything converges into having very strong numbers. Now, what could go against that could make the results a little bit in line with the guidance and makes it harder to reach this 30% is the international side, as Matt wanted to underscore, because even Karp itself, from the last interview that I think we'll touch later, he said, okay, US, that's perfect, but Europe, I think Europe that don't want to spend in AI wants to stay behind. That to me gave me a sense of, okay, on one side, everything is going even too strong. On the other side, very aware that there are some friction. I would say the real effect then will be into how they're able to shape the narrative as well. But this is something I wanted to really underscore. In the last quarters, Palantir got results that were 5%, 5%, 4% better in terms of their revenue guidance. And in terms of margin, that was like 4%, 5%, 3%, and again. So after having started their period as a listed company with very, very strong guidance and very strong expectation, and then failing to deliver, now we're seeing Palantir doing the opposite, being very good at managing expectations. And when they drop the guidance, they already know essentially what they would almost close the quarter with. So I think if they delivered 27% guidance, I think it's because they expect like 29, 30% revenue growth. Now, personally, I don't care if it is 29 or 30. Psychologically, I think the market cares because they want to see this 30%.
Do you think 30% is sufficient
For what?
to maintain the $80 to $85 stock price?
Potentially, yes, because if it is a 30% and there are signals that this could be not only sustained, but can keep improving, I would say, why not? And don't forget that now we like to focus into the revenue side, which is obviously the key driver, but where the biggest surprise has arrived so far was not there, was on the margin side. And there, what struck my attention was, yes, 27% revenue guidance. That's the biggest guidance they've ever said. So probably if they dropped a 27, that's why I think 30 is absolutely reasonable that they expect that to be achieved. But in terms of margins, like typically they were guiding something like 30. In the last quarter, they said 34. They delivered a 39, and now they guided for 39, which is a very, very strong number to say in a guidance, which makes me think, what if it will be like 42? And if we combine that with the revenue growth of maybe 30, maybe we can even exceed the famous rule of 40 with a number of 70. And now we are at 68, which is already an absurd number, like the biggest, the best number in the entire SaaS market. So my personal expectation is that we will get to the rule of 70 with like 30% guidance and 41% free cash flow margin. That's my personal expectation.
Those balloons means we're going to 100, bro. Those balloons.
Steve's 125 price is in action.
I mean, can we talk also about, because we talk about, well, you don't have to share this chart yet. We will get there. About revenue still, like top line. Okay, so we know that management typically guides pretty low compared to what they deliver, as you mentioned, the prior quarters. I mean, we're talking like 3 to 5% typically above what management guides. The problem I see is that analysts guide are super low as well. I mean, we see these forward pricing metrics thrown around, like forward price to sales, forward EPS, and they are also like not getting it at all. So do you believe that we will start to see actual estimates from analysts on Wall Street that will be difficult to beat? Because I mean, it's been like 3 beats so far this year. Like when are they going to catch up and see the actual narrative, and not maybe only narrative? When are they going to start expect more from Palantir? Because it's no longer the case that like the average price target is like in the 20s. Like we've got an even bearish analysts like expect 60. Many are expecting more than 60. Some are like 80. We have now Danais at 90. I mean, aren't the estimates going to start to follow? Because even Danais revenue estimates are like super low. Like we're talking like 27% revenue growth, like something super, super low. Like the consensus estimates for revenue are very low compared to what they're delivering, 1, and 2, what's expected in the stock quote. So what do you guys think about when will analysts start to catch up and actually start to put Palantir under pressure in terms of their revenue estimates?
Arnie, you want to take it?
I personally think analysts will face the pressure of their own estimates for a simple reason. If you see this chart with the analyst expectations for the revenue, we can dig deeper into what are the consensus numbers implied in the evaluations from analysts. And they essentially expect this quarter to be strong at 30% growth, then to have a 30% growth for the first quarter and the second quarter of 2025. But since that, we already expect the revenue to start decelerating to 27 and then 21% for the final quarter. So the end result is that analysts overall expect a revenue growth for the fiscal year 2025 of 26%. Then to decrease to 23% for 2026. If I look at these numbers, I would say yes. I mean, we can say that they are trash numbers because growing those numbers at scale naturally would get some frictions, but that makes me think that analysts are not really thinking in terms of network effects that could be triggering once you have this tornado of very good conditions just bombing the company. Now, every company now realizes that they need to invest in AI, but very strongly. Right now, companies realize that is not a fancy item, is a matter of survival, and you see evidence that companies that are really embracing these components of AI are delivering better growth, better margins, and so on. So now Palantir is literally the name that is recognized as capturing the entire value, and the recent saga with DeepSeek and so on actually validates the value proposition that Palantir is having. So I'm noticing a shift in the narrative also from media that points to, but we were so focused into LLMs, but what if the real value actually is in the application layer? Even Cathy Wood realized that, even if I was expecting her to be more voicey for time now, like even her now, she says, okay, all the value is in the application. And if we need to be honest, these numbers don't really, like these 26, 24% and expected numbers from analysts don't really fit with the narrative that Palantir is becoming the operating layer, the operating system for AI, the key software platform that enables companies to deploy AI, is just good growth. So that's why where I see a bit of discrepancy from what we that are very deep into the company and what analysts perceive overall.
And if we tie it back to what people care about, like the effect on stock price, right? Like we've had pretty easy setups to deliver beats. Now, while net income will be, I mean, EPS will be difficult and net income for this quarter, I mean, still the revenue beats will continue to come because they're just too low. So it's not been hard to sustain the momentum when you keep beating and beating and beating by, like, typically people look like, what's the percentage beat? People don't actually look like, okay, what did they actually deliver? And the general public don't really compare like we do quarter over quarter or year over year. They just look, did they beat or not? They don't really care what that beat implies. So they've been really making it easy for Palantir to sustain the momentum, I believe.
Sorry, just a little thing. This is the last quarter, so we're talking about Q4 numbers, and they will drop the guidance for 2025. So we are now talking a lot about the quarter, but in reality, everything will converge to that number. And that could be the discriminant from a quarter that is okay in terms of operations, but what will, at the end of the day, move the stock price and the narrative is how strong the narrative is, because everybody is seeing these cloud providers spending 50, 80 billions. But okay, what is happening on the software side and the guidance that Palantir will share especially now that is recognized as the AI leader in AI infrastructure, will set the tone for how asset managers think in terms of where the value is accruing into this next year.